Hi, I'm Owen from Rask Australia. In this video, we're going to talk about how you can start today and build a portfolio that works for you. The first thing you need to understand is that it's important to start small. In investing in the share market, all you need is $500 to get started. So if you invest $500 and something was to happen to it, I think that's a really good base to start from, because if something goes wrong, it's not too bad. It shouldn't be the end of the world. Now, that's different to if you had $500,000. Imagine you're a first-time investor and you've got all of this money and you go and put it all in the share market and you really don't understand what you're doing. Imagine how scary that would be. So I say to start small. Start with the smallest amount of money, see how you go, let your knowledge build over time, let your behavior build as well, because that's a really important thing when you get started, and see how you go. So start small. A question I always get is, hey Owen, I've got about $100,000 because I received some money, or I've got my savings. How could I invest it today? The really important thing here is that if you have a big sum of money, it might even be $5,000, it might be $100,000, it could be $1 million, I really don't know. But the really important thing is that you take your time. Imagine for a moment that you've got $100,000 and you put it in the share market today, but then the share market drops 10% tomorrow. Imagine how you would feel. Especially as a beginner, you'd probably feel just all different types of emotion, fear, scared, all of these different types of things, and you'll probably take your money straight out and never come back to the share market. And I think that would be the worst thing you could do. So what we say to people is, if you do have a lump sum of money, break it up into smaller amounts and invest that over the next year, maybe 2 years, depending on your strategy. So for example, if I had $120,000, that's round figures, $120,000, that's $10,000 a month. If I had $12,000, that's $1,000 every month for the next year to invest. The reason why we say to do this is because the stock market does fluctuate from 1 month, from 1 day, from 1 week to the next, even from 1 year to the next. But what the share market tends to do over a very long period of time is go upwards over time. So the important thing is just to invest small amounts of time and benefit from that. If it's up 1 day, it might be down the next day, but you're still investing rain, hail or shine. You really don't care because you know it's all about the long term. So what's an easy way to start building your portfolio from scratch? Now there's this concept called a core and satellite approach to investing. So what is a core and satellite approach to investing? Core and satellite, and you can probably see from what I'm doing here with my hands, is that we've got this really strong core in the middle, and then we've got these little things going around the outside called a satellite. So a core, as it looks like, is a really strong part of your portfolio, and this is where you should begin your investing. If you have $500 or $1,000 or even $10,000 today, it's your core that you should be working on, just like if you're working out in the gym. Start with your core. And what goes into your core? Well, things like blue chip shares, established businesses, ETFs or exchange traded funds, even an investment property are the types of things that should be included in your core because they're reliable, they're stable, and they might even pay an income to you in the form of dividends or something like that. So that all goes in your core. And I would say a good base to get to with a core is say $20,000 or $50,000 before you start investing in these higher risk satellite or tactical positions which go around the outside. So let's say, for example, you're starting from scratch today, get to $20,000 or get to $50,000, maybe even a bit more for your particular circumstance. Start investing and add to your core. Find the reliable investments, the really no frills or boring investments that you should be making early on, and start adding to them today. And then after a period of time, let's say after a year or two, once you're feeling a bit more comfortable with the ups and downs in the share market, once you've read a bit more and listened to podcasts and done all those things to increase your knowledge, then start taking the risk with these little ones around the outside. So what you could do in 2 years from now, once you have an established core, is start to split your money so that you can add some of these little tactical or little satellite investments around the outside. Now you don't have to do this. This is a really important thing. You don't have to add tactical or satellite positions to your portfolio. You can just stick with the core. You can stick with ETFs, stick with index funds, stick with investment properties, stick with cash, all of those really boring but simple and effective things that go in here. But if you do want to do more active investing, or let's say you believe that something like robotics or I don't know, the Internet of Things are really exciting industries and you want to be investing in them. Those are the types of things that can go in your satellite or in your tactical positions. So you might find an individual company that is a really exciting company, but it's also high risk. you can put a little bit of money in your satellite positions and add them around your core. So with the satellite positions, this is an important point. With the satellite positions, you can be a little bit more aggressive and you can be a little bit more shorter term focused. So you might say, I'm going to invest in a satellite position for the next 1 to 2 years because I think robotics are going to be a really big thing in the next couple of years and people want to invest in them. But with your core, remember that you may pay tax every time you buy or sell and every time you receive a dividend. You don't want to be chopping and changing your core. You want to keep it stable for the long term. This is where the real driver of your long-term wealth should come from, along with little bits and a little bit of excitement from the things around the outside. It's kind of the best of both worlds approach. So that's a way that you can build up your portfolio from scratch really easy. Start with small amounts of money, invest for a long period of time, starting with your core, and then add more exciting, smaller positions over time, acknowledging that they are much higher risk. That's what we call the core and satellite approach to investing. You'll find more information below this video on how you can get started and the different types of things you need to understand to build a rock-solid investment portfolio that works for you. I'm Owen Raskovich from Rask Australia. Thanks for tuning into this video.